Guys, Ethereum just shattered its all-time high, hitting $4,882, even higher than the 2021 peak. And the reason? One name: Jerome Powell. After his speech at Jackson Hole, the market went wild, with rate cuts expected as early as September. Money is flooding back into risk assets, and crypto is leading the charge. Ethereum is up 45% year-to-date, outpacing Bitcoin's 25%, while Solana, XRP, and even Dogecoin are going absolutely parabolic. We're in the middle of what could be the start of a massive breakout. But here's the big question. Is this the beginning of a true bull run, or just a short-term pump before the market cools off? In today's video, I'll break it all down. Let's dive right in. When Jerome Powell, chair of the Federal Reserve, speaks, the financial world listens and crypto reacts instantly. His remarks at the Jackson Hole Symposium didn't just move traditional markets. They lit a fire under Bitcoin, Ethereum, and nearly every major altcoin. Here's why this moment is so important.
The Fed controls the flow of money. When interest rates go up, borrowing gets expensive, liquidity dries up, and investors move towards safe assets like bonds or cash. When rates come down, the opposite happens. Money gets cheaper, liquidity rises, and risk assets soar. Powell's tone this time was dovish, signaling a potential rate cut in September. That hint alone sent buyers rushing back into crypto. Unlike Bitcoin, which is mostly seen as a store of value, Ethereum powers an entire ecosystem, from DeFi platforms to NFT marketplaces to Layer 2 solutions. Lower rates mean cheaper borrowing and lending on DeFi platforms. Institutions finding it easier to justify adding ETH developers having more capital to build. Fueling innovation. More adoption leads to higher demand, which drives prices even higher. Bitcoin isn't being left behind. It surged past $117,000, jumping over 4% in hours after Powell spoke. But Ethereum's growth, 45% this year compared to Bitcoin's 25%, shows where the market's attention is shifting. When liquidity floods the market, traders take on more leverage, and retail investors FOMO back in. That's why we're seeing Dogecoin up 10% in a day, and Solana jumping 9%. Asterisk. This isn't just about today's rally. Historically, when the Fed cuts rates and liquidity rises, we see multi-month bull cycles. Think 2017 and 2020 to 2021. If the Fed follows through in September, this could be the start of a sustained run, asterisk. The numbers don't lie. Ethereum is outpacing Bitcoin in 2025.1. Year-to-date performance ETH, plus 45% BTC, plus 25% SOL, plus 30% Doge, plus 22%. This widening gap shows a clear rotation of capital into ETHEREUM.2. Institutional demand is booming. The approval of ETH spot ETFs earlier this year changed everything. Hedge funds and pensions are pouring money into ETH because it offers growth plus utility. Unlike Bitcoin, which is seen mainly as digital gold. 3. Explosion of Layer 2 and DeFi networks like Arbitrum, Optimism, and Base are booming. Transactions have tripled since January, and DeFi's total value locked has jumped 60% to $150 billion. This creates more demand for ETH and boosts staking yields. 4. Staking creates scarcity. Over 27 million ETH, 22% of supply, is staked. Less ETH on exchanges means more upward pressure, especially with EIP1 559 burning fees during every transaction. 5. Shift Ethereum is no longer just a speculative asset. It's the foundation of the digital economy. From real-world asset tokenization to dApps, ETH is where innovation is happening. 6. Technical momentum. ETH is showing strength against BTC. Support is at $4,500. Resistance at $5,000 and the ETH to BTC. Chart has been trending upward for 5 straight weeks. With excitement this high, you need a plan. Here's how I avoid FOMO while maximizing gains. DC $8 cost averaging. Buy fixed amounts weekly. Simple, stress-free, and consistent. Set clear entries and exits. ETH support is $4,500. Take profits near $5,000, $5,500. Diversify. Balance BTC, ETH, and a few altcoins. Keep some stable coins ready for dips. Use stop loss and take profit orders. Automate your risk management. Stay informed but avoid overtrading. Limit screen time. Check data, not just hype. Take profits gradually. Lock in gains at key levels instead of chasing tops. Think long term. Time in the market beats timing the market. Here's what I'm watching. Ethereum, ETH, resistance, $5,000, then $5,500, $6,000. Support, $4,500. Bitcoin, BTC, resistance, $120K, $125,000. With $135,000, $150,000 in play, if momentum builds. Altcoins call on Sol could retest $200 soon. XRP is nearing a breakout. Doge is already up 10%. Meme season could be back. 3 signals I'm watching closely. 1. Institutional inflows. Over $1 billion weekly combined in BTC and ETH. ETFs means serious demand. 2. On-chain activity. ETH transactions and Layer 2 usage are skyrocketing. That's real adoption. 3. Sentiment and liquidity. Stablecoin inflows and balanced sentiment show we still have room to grow. Together, these signals suggest this rally has legs. But remember, markets move in waves. Pullbacks are part of the game. Here's my plan. Accumulate on dips. ETH near $4,500. BTC around $112,000, $115,000. Layered profit targets. ETH at $5,000, $5,500, then $6,000. BTC at $120,000, $125,000, and $135,000. Hold stable coins. 20% ready for dip buys. Watch key metrics, ETF flows, on-chain data, and funding rates. Set stop losses. ETH around $4,300. BTC around $110,000. Discipline beats luck every time. Solana, Sol, entry, $165, $175. Targets, $200, then $225, $250. Stop loss, $150.20. Chainlink, link, entry, $20, $22. Targets, $28, $30, then $35. Stop loss, $18.30. Arbitrum, RB entry, $1.35. $1.50. Targets, $2 then. $2.53. Stop loss, $1.20. Bonus, Doge for quick trades. Buy under 8 cents. Sell aggressively around 10 cents, 12 cents. Asterisk, asterisk, asterisk.